Hey guys, potential shift here. Trade like it's 2026, not 1996. It is Monday, March 23rd, and it's about 9:15 a.m. right now. It's still pre-market. I did make my short this morning outlining what's going on in markets today, and it is a very busy day in markets today. But I wanted to make a longer form video about it because there is so much going on right now. SPY has jumped 16 points pre-market off of a Trump Truth Social post. In that post, Trump said that he is going to be delaying any attacks on Iranian power plants. Now, he had threatened over the weekend to attack those power plants. Iran threatened back that they would attack our allies in the Gulf, water desalination plants, that they would mine the entire Persian Gulf. So, Trump has now said that he's not going to bomb those power plants. What to make of all of this? It's a tricky one. It's a very tricky one. On the one hand, it's obviously bullish. We've had a de-escalation. On the other hand, Iran has denied that any sort of talks or any sort of deal has occurred. So has this de-escalation actually occurred, or is it just Trump saying the de-escalation is occurring to sort of boost markets and lower oil prices, which would be advantageous for him politically? We don't know, right? But you know what? It doesn't matter that we don't know that. What matters is what our market's going to do. And I said this in my short. What's important here right now is the opening bell, all right? Because we have a lot of shorts in this market from last week, right? There was a lot of selling last week. We declined, I don't know exactly how many points, but 15 points in SPY, maybe more last week. And there's got to be a lot of bears and a lot of short positioning out there. And a bounce like this could really force some of those shorts into buying this morning. So the opening bell is going to be key, okay? If we see upward momentum on the opening bell, that's going to begin to snowball, because the higher we go, the more shorts are going to be forced out of their positions, the more buying is going to occur, more shorts are going to be forced out again, more buying is going to occur, et cetera, et cetera, et cetera. All right, it's going to become a feedback loop of just moving higher as people are forced out of their positions, okay? So keep your eyes peeled for that. We could see a major up move this morning if that begins to occur. On the other hand, though, like we said, Iran has denied that this story is happening. This could just be a Trump gambit, it's just a move by him to sort of mess with markets. Maybe he doesn't even really mean it. Maybe he says he's not going to bomb the power plants, and then guess what? At 1 p.m. today, he bombs the crap out of them. That could happen, in which case, this move we're seeing pre-market is complete garbage, all right? So if off the opening bell, you see us start to move lower, guess what? The shorts can hold now. They don't have to exit their position. They can start telling themselves, hey, you know what? This is fake news. This isn't real. The market was already bearish. We're going to keep going lower, all right? So if off the opening bell we start moving lower, the shorts are going to be in a much better position to hold, and there's much less chance of a snowball effect of things going higher. Now, with all that said, I also think that there's an underlying bearishness in this market, which is justified. We should be bearish here. There's a lot of bearish things going on, but it's also gotten a bit overextended, in my opinion. All right. Even in the most bearish of bear markets, even in a panic, there are bounces, all right? And we are getting to that point, I think, where no matter how bearish we are, we're going to need to bounce just to begin to even out the market structure and the positioning, all right? There's just too many people on one side of the trade. And if you've been watching any of my videos, you know that I consider that as my edge, all right? My sole edge is when market participants start getting lopsided and out of position. And I think there's really a lot of lopsidedness on the bearish side, on the short side right now, all right? So even if this story isn't true, I think there's a bounce brewing in this market. And I don't want to say exactly when. This could be the trigger for it, but I don't want to say that for sure, because off the opening bell we could move lower, and then and then it's not the trigger. What would be a trigger if this isn't the trigger, if we don't move higher right off the bell and just start rocketing higher, all right? Which, I think is possible, if not exactly probable. I will be looking for capitulation. Not exactly today, but soon, right? I want to see capitulation because there's so many bears getting in here. This market is becoming so lopsided on the short side that if you see capitulation, if you see a really fast, strong down move, that will be the bulls giving up, and it will also be a signal for all of the institutions and all of the sharp retail traders. That will be the buying signal. All right. If we see a fast, like 10-point down move in SPY, that's capitulation. And that will signal to the market and to savvy players that a bottom has been put in and it's time to buy. All right. So those are the two things I'm going to be looking for today to trade. What's the action off the opening bell? If we have a lot of momentum moving higher fast off the opening bell, I'd be a buyer of that. Now, like I said, I think that's possible, but probably not the most likely scenario. All right. Because that kind of play is a bit obvious, and the market doesn't do obvious. But I'd also be looking for capitulation at some point today. All right. Maybe the market starts moving lower off the bell. All right. And maybe it starts moving lower fast and strong. And that move picks up steam as the day goes on. All right. And then we see a sharp capitulation move some point this morning or early in the afternoon. That would signal a bottom to me. That would signal a bottom to me much better than, say, strong upward momentum off the bell. So those are the things that I'll be looking for today. And if you notice, I'm I'm telling you all of this, and the logic behind it is market structure and market positioning, and you know I'm not trying to predict what the market is going to do, all right? I'm not trying to predict how the market is going to react to Iran or to Trump. What I am talking about and what I am trying to predict is what other market participants are going to do, how other traders are going to react this morning, all right? That is how you play the market, all right? There's two tiers of thinking. The simple first tier of thinking, well, all right, Trump had a Truth Social tweet. How will the market react to that? What should the market do? And then there's the second tier of thinking, which is, all right, there was this post. How are other market participants going to react to that? And how do I take advantage of that? That is second tier thinking. And second tier thinking has an edge, and second tier thinking can win. While first tier thinking is just liquidity and bait for savvier traders. All right. So, you can listen to all these guys on X and on social media and, making their predictions using their flag patterns and, saying, hey, look at this macro event. Oh, Trump said this. That's got to be bullish. Or Iran did this. That's got to be bearish. That's first tier thinking. And it's weak. It's weak thinking because it has no edge. It has zero edge. Everybody sees those stories and everybody thinks the same thing. So you know what? Guys like that, I call them hunch fund managers, all right? Not hedge fund managers, hunch fund managers, because they're playing hunches, and they're playing hunches that everybody else sees, all right? Hunches that everybody else sees, news stories that everybody else sees, and the conclusions you draw from them that are conclusions that everybody else is drawing, you have zero advantage, zero edge in those types of plays. Don't make them. All right. That's first tier thinking. You need to become, if you want to win, if you want to be profitable, a second tier thinker. All right. Not what is Mr. Market going to do? You have to think, what are my opponents? What are my enemies? What is Wall Street and the institutions? What are they going to do? And how do I beat them? All right. That's an edge. That's how you win. All right. All right, guys. And that's what I mean when I say trade like it's 2026, not 1996. In 1996, when it was all human traders, maybe a story like this could happen and you could, you know, you could think, hey, how are all the humans going to react to it? I'll react the same way because if all the humans are buying, I'll buy too, because that's the way the market worked back then. It doesn't work that way now. There's algos now taking advantage of players who think in obvious terms. All right. Don't be an obvious thinker, So play the market like it's 2026. All right. And the other thing I say, stop trying to pick winners and start trying to be a winner. All right. Don't try and predict where the market's going to go. Start trying to beat your opponents. Wall Street, the institutions, the algos, and other traders. All right. Good luck, guys.